top-down analysis for precision trading. All right. So top-down analysis is basically the study of the market behavior, how the market moves. Top-down analysis is you basically following the trend, studying the market trend, and working alongside with the market trend, what the trend is doing. Is it an uptrend? Then what should I look out for? If the market is an uptrend, is it downtrend? Then what should I look out for in a downtrend? So all these things are not that complex. It's actually very, very easy for you to spot that, okay, this is actually an uptrend or this is a downtrend. All right. And for derivative trading, it actually stopped on the 24-hour time frame. Yeah. So you have to use your MT5 to check your weekly and your monthly time frame for any pair you're about to trade. To check your monthly time frame and your weekly time frame before you actually conclude on the overall trend. All right. So if you check the monthly time frame now, you see that we are still trading to take out this high. On the monthly and weekly time frame, we are trading to take out this high because the market was creating series of highs from here. All right. So that's all the market structure is all about. You are studying the market movement if it's an uptrend or a downtrend where you have your break of structures. Are you having break of structures to the upside or to the downside? Are you anticipating a new break of structure and or that's all you really want to know when you are trading the top down analysis. Yet. All right. So let's look out for some volatility in this system. So let's say this is the higher time frame. This is the like daily time frame or weekly or 4 hours. Then at this point you would have something like this too. You would have different POIs at this point. All right. So this POI is actually the trend continuation from here. It's actually the trend continuation at this point. Then if you are looking out to trade again from, to look out for the next POI where the market is actually going to reverse from, then you use your Fibonacci to mark from the high to the low, from the high to the low. Then a lot of time you would see that the zone you have here is actually at the discount zone and not at the premium zone. So it's actually possible it's not going to play out. All right. So once you use your Fibonacci too, then you want to know that you have to look out for your POIs at this point. Yes. Then you wait for market to reverse back into this point. Then you want to start selling from this point again. All right. I think the V10 is continuing to the upside, but yeah, I'm actually anticipating for price to take out this high as as the next break of structure. That's my top down analysis. That's from the top. I'm doing it from the top first. Then I will now scale down to the lower time frame to look out for entry confirmations, patterns, and all. All right. So immediate price goes into this POI. If you understand the candlestick pattern, I'll still talk about the candlestick pattern on the long run. All right. So if you understand the candlestick pattern, you'll see that we've been having a couple of rejections and rejections and rejections, but we do not have a money star candlestick at that point. We do not have any money star until price got to this point. And from here we had the money star candlestick 1, 2, 3. Then after the money star candlestick, you can see from the next candle, if you trade on the higher time frame, then boom, from the next candle, you would buy. And your profit target here, if you're a swing trader, that's it. So you just buy from the next candle, then you'll be holding till price will get to that high. Because it's actually a clean structure, very clean. It's actually very clean. Yeah. Price keep doing, break of structures and break of structure, then came back into this POI. And here we are actually anticipating to trade towards that high. All right. So from here, after price, broke out from this level, then came back into this last bearish candle we are having here. Then price actually did another confirmation here for us to keep buying to the upside. All right, so let's check the 4 hours time frame. On the 4 hours time frame, at this point, we give us a nice morning star candlestick. Yeah, it didn't happen here, but 1, 2, 3. Then at the close of the third candle, you want to get into the trade and your stop loss below the candle. That's how I use the candlestick confirmation for my trades. Once I spot that type of candlestick, then on the next candle I want to enter and my stop loss just below the candle, and that's it. That's how it works. So here, using the top down analysis, we already know that price has got into our demand zone on the higher time frame, which is here. That's got into the demand zone on the higher time frame. Then we want to see the rejection, and from there we want to start buying to the upside because price is actually changing trend. Immediately goes into this POI, into this higher time frame POI. All right. Then here we had we had a change of character here. Price actually stopped being a downtrend here. They start being an uptrend at this point. All right. Remember we marked the last candle we had here, the last bearish candle before the bull run. All right. So going to the 15-minute time frame, we have a KMR pattern here where the market actually reacted from. So we mark that on the higher time frame first, then go to the lower time frame to look out for your KMR pattern. Because remember, we already know where we are trading towards, that we are looking out for more buys to the upside, and that's it. Then on the 15-minute time frame, this happens to be the last candle at this point. Yeah. All right. Then on the 15th time frame, I want to see if we have a KMR pattern formed here. All right. Changing this to line graph, you can see it's actually very obvious. We had a sweep here. We had internal liquidity protected low and all. All right. Then changing it to candlestick again. Here we have the sweep. Then here we have the protected low, and here we have the internal liquidity. All right. And here is our POI. Price tapped into that zone the first time. Then here we had we had the money start here, basically 1, 2, 3. Then from that, after the close of the third candle, you wait for the third candle to close. So once the third candle closes, your stop loss just below the candle, because you do not expect any candle to you do not expect the next candle to invalidate this candle. That's why you have your stop loss below that candle, yeah, because you do not expect it to invalidate that candle. Then price came into the zone the second time and gave us another confirmation here, right? So your entry here and your stop loss still below the candle, and from then it has been buying aggressively to be